Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within corporate filings. And this time we've got an amendment to an annual report, which means they're cleaning up some details, and in the world of corporate finance, cleaning up details can sometimes reveal well. Let's just say it can be revealing. This report is an amendment to Real Messenger Corporation's annual report. It is like they're going back to add some extra explanations and paperwork to their yearly review. We're going to dig into what this amendment is all about, why it is being filed, and see if there are any hidden gems or red flags. And before we dive in, if you're new here, make sure you hit that subscribe button for more breakdowns like this. And hey, if you want to chat with us and the community about these filings, our Discord server is linked in the description below. So, what's the big deal with this amendment? Essentially, Real Messenger Corporation, or RMSC, is filing an amendment to their original annual report. Think of it like this: their yearly financial report was filed, but they're now adding something extra to it. This isn't a completely new report, but an update to an existing one. The main reason for this amendment is to add more information about their internal controls and how they're managing their financial reporting. They are specifically adding things related to how they check their internal systems for keeping financial information accurate and reliable. They've also included their list of exhibits, which is basically a catalogue of all the important documents related to the company. When companies file reports with the Securities and Exchange Commission, or SEC, they have to have a system in place to make sure all the important information is properly recorded, processed, and reported on time. This is called disclosure controls and procedures. It is basically a fancy way of saying they have rules and processes to make sure they are telling everyone the right things at the right time. The Chief Executive Officer and the Chief Financial Officer of RMSC have reviewed these procedures as of the end of their fiscal year, which was the 31st of March 2025. They are confirming that these systems are working as intended to make sure that whatever information needs to be shared is shared accurately and promptly. Now, this part is crucial. Management is responsible for making sure that the company's internal financial controls are strong. These controls are designed to offer reasonable assurance that the financial statements are prepared reliably for external purposes, following generally accepted accounting principles. This includes policies and procedures that aim to keep accurate records of the company's transactions and assets, ensure transactions are recorded correctly for financial reporting, and that money is spent only with proper authorization. They also aim to prevent or quickly catch any unauthorized use or sale of company assets that could mess with the financial statements. However, it is important to remember that internal controls aren't perfect. They have limitations, and they might not catch every single mistake. Here is an interesting detail. RMSC is not including a report from management about their internal financial controls. The reason given is that they are in a transition period which is allowed for companies that have recently gone public. This signals that they are still setting up some of these more formal reporting structures. Another key point here is that Therese no attestation report from their accounting firm. This means their external auditors haven't provided an independent review of their internal financial controls. The filing states this is because they are considered a non-accelerated filer and an emerging growth company. For these types of companies, this step is often not required, at least not yet. The good news on this front is that there haven't been any significant changes to their internal financial reporting controls during the period covered by this report that could negatively impact their financial reporting. This suggests that the systems they have in place, while perhaps still maturing, haven't experienced any major disruptions. Now let's quickly look at the exhibits. This section is like a table of contents for all the important legal and financial documents that are part of this filing. We see references to merger agreements, amended articles of association, consulting agreements, and the usual certifications required by the Sarbanes-Oxley Act, or SOX Act. These certifications are where the CEO and CFO personally vouch for the accuracy of the financial information being presented. A lot of these exhibits are incorporated by reference, meaning they were filed previously and are being brought into this current report for context. For instance, there are several amendments to a merger agreement dating back to March 2023. This tells us M&A activity has been a significant part of the company's recent history. The presence of the Section 302 certifications from the CEO and CFO shows they are complying with the SOX Act requirements that mandate senior management to personally certify the accuracy of their company's financial reports. And finally, we see a series of exhibits related to inline XBRL. This is a standardized way of presenting financial data so it can be easily read and analyzed by computers. This is a positive sign showing a commitment to transparency in how they present their financial information. Now, let's put on our investor hats and see what this filing tells us about Real Messenger Corporation's health and direction. This amendment doesn't contain new financial tables or balance sheets, which is a bit disappointing if you were hoping for a deep dive into their numbers. However, what it does tell us is important from a governance and compliance perspective. The fact that they are filing an amendment specifically to beef up the sections on controls and procedures, especially as a newly public company, suggests they are taking compliance seriously. They are making sure their internal house is in order regarding financial reporting. The absence of a management assessment of internal controls and an external auditor's attestation report, while permitted for emerging growth companies, does mean that investors need to be a little more diligent in their own assessment of the company's financial reporting reliability. It is not necessarily a red flag, but it means the direct oversight on those controls isn't as robust as it might be for more mature companies. The ongoing amendments to the merger agreement are a strong signal that the company has been involved in significant corporate structuring, likely going through mergers or acquisitions. This can be a driver of growth, but it also introduces complexity and potential integration risks. Investors should keep an eye on how these integrations are progressing and whether they are delivering the anticipated value. Overall, this amendment to the Form 20F filing for Real Messenger Corporation, or RMSC, is more about reinforcing their commitment to proper financial reporting and compliance than revealing new financial performance data. It is a step towards strengthening their corporate governance. For RMSC, the direction seems to be towards solidifying their operational foundations as they navigate their status as a publicly traded company. The main strength here is their proactive approach to compliance, even if some of the formal reporting requirements are being deferred due to their emerging growth company status. The weakness, or rather the area needing continued investor attention, is the lack of independent auditor attestation on internal controls, which means investors need to perform their own due diligence more thoroughly. A notable risk could be the integration of any past or ongoing merger activities. If these aren't managed effectively, they can lead to financial overhangs or operational disruptions. Conversely, an opportunity lies in leveraging their XBRL filings to become a more transparent and easily analyzable company for investors. In conclusion, Real Messenger Corporation is taking a deliberate approach to building a solid reporting framework. While this specific filing doesn't offer a financial performance update, it provides insights into their focus on governance and compliance, which is a crucial building block for long-term investor confidence. Alright, that is our breakdown of Real Messenger Corporation's latest filing amendment. What is your take on these details and what they signal for the company's future? Let me know your thoughts in the comments below. If this analysis was valuable, please hit that like button, it really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join our community on Discord, the link is in the description. Thanks for watching, and we'll see you in the next one.